all the evidence we saw during COVID was those of our clients that maintained their investment or sustained their investment have come out of COVID in a stronger position. Actually, the US, we've had 2 quarters of technical recession in the first and second quarter of the year, but our business in the US grew close to 10%. So I think, look, advertising hasn't detached from GDP. We're not claiming that. But I think that the advice to companies is clear that in sustaining investment, talking to customers at a time when things are tough. I mean, we're working a lot with Tesco in the UK, helping their customers navigate their way through difficult economic conditions. Those things are important, and it's important for companies to continue to invest. And look, when times are tough and prices come down, it's a good time for advertisers to gain market share. And some of our clients think about this in a much longer term investment case, can do that.
And in terms of the new business pipeline, how does that look? Because I think there is clear momentum in the first half, and you can see that in the billings report at $3.4 billion for the first half. How do you see the upcoming period?
Well, look, we're looking at our new business pipeline. It's about 10% lower than it was this time last year. So it remains strong. I think clients that have got to adapt their business to changing economic conditions, to changing conditions in the market. I mean, look at the innovation in digital media, look at the growth in e-commerce. These are all areas where clients need to invest. But we do that against a broader macro environment that is no doubt a little bit more challenging, as we were saying.
Yeah, and you're continuing to make acquisitions in the e-commerce space. I know Corbiz, one of the recent agencies that you've picked up with particular focus in Latin America. Could you just talk a little bit more about that particular focus in terms of ad spend? Because I think the market caught a bit of a cold when they saw the Meta numbers and some of the decline that we've seen around spending on Meta.
Yeah, look, I think our group estimates for the year about 8% for ad spend overall, 12% digital, 4% traditional. So actually traditional media and TV has held up pretty well, but digital is still growing faster. I think what you're seeing for the first time as the digital market matures is the impact of competition on individual company results. So you saw Facebook up 6% in the 16% in the second quarter. I think Meta up substantially less than that. That I think is much more the result of different competitive situations, different competitive dynamics. Look at all of these companies being investing more in TikTok. And I think TikTok actually is gaining share from some of the other platforms. And probably what you're seeing is more a result of competitive dynamics than it is a lack of demand overall for advertising.